So hi guys, welcome back to another video. So in this video I'm going to give you a brief update of what I am currently learning. I think Caleb this year has been a very very interesting year for both me and Caleb. I think this is the year he discovered poly market, went extremely deep into it, learned one or two things, and is still doing it. And for me, what I discovered is quite different from him. So what I've discovered is the idea of trading stocks rather than trading currencies. So for the last like 8 years, we've been trading currencies, and currencies are a bit more efficient. So if I was to just issue you with some ideas, I'd want you to think about them, and you'll understand why I'm moving more from currencies into stocks. Let's start. Number one, there are very many stocks. I think there are over 100,000 stocks that are trading in the public markets, which you can trade from anywhere in the world. And these stocks are listed in the American Stock Exchange, in the New York Stock Exchange, in the Nasdaq, in the Russell 2000 in Europe. There's Indian Stock Exchange, there's Turkey, there's Chinese, there's Japanese. So there are very many companies which are listed in the public markets that you can trade. So the first thing that you should understand is, unlike currencies, stocks have very many opportunities. Okay, the opportunities that exist in these businesses are very many. That's one. Two, they are less efficient than currencies. So if you think about a pound, if you think about the euro, if you think about the dollar, if you think about the yen, these are just, it's one asset that is known by everyone, I think, around the world. And these people who know these currencies, or the institutions that are taking place in these currencies, are not doing it primarily, by the way, for the idea of making money. No, in currencies there's actually the idea of just trade. Like we're trading. I'm selling you oil, you're selling me a particular thing. What will we use to pay? A particular currency. Hence the exchange rate will be affected. There's the idea of buying a company. Let's say Google wants to acquire a company in China. They won't pay with dollars, they'll pay with the yuan. So the yuan has to be converted. That transaction will bring about some changes. So that's why you'll see that the currency markets are mostly traded by the interbanks. They're mostly traded by the big players, those who are interested in moving markets. That does not mean that us retailers or the people who are doing the retail side cannot benefit from it. No, you still can benefit from it. But my research indicates that there are limited opportunities and the markets there are less efficient. For example, if you look at a currency, how many times do you think a currency can go up 30-40% within a year or even a month? Or it takes time for a currency to appreciate that much against the other. Like for example, this year I think the dollar is down about 10-11%, and that's a significant move from when Trump was elected. I think the dollar has come from around 110 to trade as low as I think 197.5 with currently where we are. So the trend has been to the downside. So currency markets are a bit less efficient, so they are more efficient, so it's harder to generate high outstanding returns when you're trading the currency markets. Now if you move over to equities, you'll find stocks. For example, if you looked at the GameStop saga, GameStop went up over 500%. If you look at what Nvidia has done, Nvidia has gone up over 500%. If you look at what Netflix has done, Netflix has gone up over 500%. I think from 120 to now trading over $1,200 on Netflix. So these other markets, which are called equities, have better opportunities and tend to move more, unlike currencies. They're not as slow as currencies. And so if you come to the equities markets, you'll have categories. Like for example, you'll have the large caps. In large caps, when you look at the foreign market, large caps are stocks that are, let's say, $10 billion plus. Those are large caps. Small caps will be anywhere between 50 million to around 2 billion. And that's why I want to specifically be focusing my attention on the small caps, because the small caps are actually now less efficient than actually the large caps. For example, if you look at Microsoft stock, if you look at Nvidia, Tesla, these are stocks that are crowded by institutions, people who are trading billions of dollars, and hence they are more competitive. The pockets of opportunities there are not as many as the ones that exist when you're trading the small caps. So small caps are essentially stocks that are mostly actually traded even over the counter. They're not even traded in these exchanges. They're not yet there. And so I'm paying attention now to learning that aspect, and that includes learning fundamentals. I'm learning the technicals in that side. They're a bit different. Seasonal tendencies and cyclical tendencies, earnings, price to earning ratios. This, I'm sure, is a very, very new language to most of you guys who are just used to the idea of looking at a chart, and especially right now in Kenya, where you've made Forex like a game. For most of you, this looks like mambo jumbo. It's not something that you're used to. But I can assure you that if you have found any form of consistency in the currency markets and you've been able to generate some returns from those markets, you can be certain that these other markets are a little bit easier for you to generate returns. They have more opportunities, and the level of returns that are available in this side are way, way more, unlike the other side. And so I'm devoting my time to learn that aspect. So I'm not yet very good at it yet. So I'm still new. I'm learning about it. However, because of my reading nature, some things are not quite new. Some things are quite easy for me to pick up. Also, the fact that I already have a technical background, I already have a macro of the fundamentals. It's quite easy for me to just put everything together. In fact, I think what I'm currently learning is the last. I wouldn't want to say that this is the last thing that I'm learning and then I'm done. No, because you'll always forever be learning if you have a career in finance. That will never change. But I think that this primary model that I'm learning right now is what most traders also don't understand, and is a very important aspect, especially if you're interested in building a career out of this. I'm not interested in people who are just looking to make money out of this. So there are very many pockets of opportunities that you can look at, and for me, I've decided that what I'd want to become an expert at is trading equities and currencies. And for currencies, I've gotten to that point where I think I really understand what goes on in those markets. And so now I'm shifting gear into the equities markets. I would say that when that time comes, probably I'll have 70% of my money in equities, 30% in currencies, and all the other asset classes that exist. I feel like equities are the asset classes that have done the best over the last 100 years. No other asset class has beaten equities in terms of generating returns. So you can think about becoming very good at picking stocks there, knowing when to rotate in, knowing when to rotate out, knowing when to go full mode cash, knowing when to be fully invested. Those are the things that I'm learning, and I'm learning them from different people. There are also people who are quite good at this, and just like I learned trading from some people, I think I will be able also to pick up this, and I also share these videos for you guys to see the progress. Like, let's say when I open my first live account, because the minimum on this side is about $25,000 that you need for you to have an account where you can margin trade, not a cash account. If you have anything less than 25,000 due to the PDT rule, you'll have a cash account. But I don't want a cash account, I want a margin account. And so that's what I'm looking for. I'm looking to now go deep into this, and hence the reason why you've seen this year we've really gone silent on producing a lot of videos, but you're coming back slowly but surely. And even if you're going into, like for me, what I said in the previous video, which is we're looking to go into investment banking more than into what you're doing the retail side, I think you'll need to be very proficient at trading equities and understanding how equities move, because you need to remove stock recommendations, you need to come up with ideas on where you can find pockets of opportunities, and that's what I'm doing. So this is why I'm learning stock trading. I've given you 1 or 2 reasons. You can also do more research. You can also disagree with me. I'd love to see why you'd have a different opinion on that. And by the end of the day, it's a learning opportunity for everyone, including me. So with that said, we'll catch up in the next one. Peace.